in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes, the US and Iran trade attacks for a second day, testing the fragile ceasefire. Stocks rebound though, oil erasing some gains despite renewed tensions. And IPO appetite, SK Hynix's US offering sees strong investor demand. All right, looks like a little bit of stabilization around the world. Let's begin over in Hong Kong with Winnie Su for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. It's been a very jittery session in Asia today as investors really grapple among the different factors, including the Middle East tensions and also some hopes around the AI trade. Now you have the MSCI Asia here fluctuating throughout the whole day after 2 days of declines. But the most volatility again seen in South Korea's Kospi index, trading in fact in the green at the end of the day. However, the gains mostly led by SK Hynix, which is up more than 5%, as you just mentioned, ahead of that U.S. listing tomorrow. Now, appetite is very strong. We are seeing it being oversubscribed by more than 7 times. Now, flip the board, we take a look at the Chinese assets because mainland Chinese shares, CSI 300, in fact, up more than 2%, leading gains in Asia, driven by the rally in chip makers. Also, some optimism ahead of the memory giant CXMT's IPO next week. And also, when it comes to currency, also leading gains in Asia, following that stronger fixing from the PBOC.
Yeah, we're getting an Asia IPO a week, it seems now, Winnie, in the US. That's Winnie Su in Hong Kong. Thank you. Now let's get to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, today feels a little bit like yesterday in reverse, with oil containing some of those gains. So, of course, the Stocks Europe 600 is bouncing back a little bit. And now the exception here across Europe is the FTSE 100, which, of course, has a lot of those oil major names, but is also dragged down today by AstraZeneca, the pharma company whose drug trial just failed to kind of contain a disease. And so if we look at currencies here, the euro is bouncing back a little bit. Of course, dollar strength is a bit contained today. We flip the board here. Same goes with pound sterling is also strengthening a little bit. And all across Europe, bond yields are falling, led by the short end with those rate hike expectations changing. And actually today, UK gilts are outperforming the rest of Europe. And so I think everything, again, we're going back to just oil watching here in Europe, Bonnie.
Exactly, Justina, and as you say, contained. So we did rise, but we are seeing just a little bit of a fall off today, and that may be helping with stocks. Though we did see a bit of a flight to the safety of chip stocks. Who would have thought it yesterday? So we saw pretty aggressive buying into the close. We were still lower on the S&P 500 for the day, but only by about 0.3%. And the Philly Sox Index was up 2.2%. It looks like that may continue today because we have the Nasdaq 100 futures pointing to an even stronger gain than the other indices, but they're also pointing to gains. It's a fascinating dynamic because up to yesterday and the bellicosity of President Trump, we had been seeing a lot of jitteriness, a lot of selling off in U.S. stocks, and now it seems like the tech trade might be a trade of safety. Let's take a look at yields because, of course, we got the FOMC minutes. Little milk toast, that was the word that Michael Ferroli used. Paul Donovan put it even more succinctly, saying could go up, could go down. Essentially, we don't know what the next move is going to be from the Federal Reserve. 2-year yield coming off just ever so slightly from yesterday's position. It's still all the way up to nearly 420 though. And that 30-year yield is staying extended at 507. Not much movement at the back end of the curve, just at the front end of the curve, pricing out just ever so slightly those rate hikes. And this is your picture for oil then. So we did move higher. We're off those highs, but as you can see, just by a little bit, and we're still at 73 and change on WTI, and Brent crude still above $77 a barrel, a far cry from where we were just about 25 or 6 hours ago. All right, let's get to some individual pre-market movers now. We'll go back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. U.S. tech is back in the green this morning in pre-market trading. After some weakness recently, it seems that this very strong demand for SK Hynix offering in the U.S. has really reassured investors about this AI trade. And so we are seeing the likes of Intel and Micron very much in the green this morning. Moving on to Ionis Pharmaceuticals, which has developed a drug with AstraZeneca over here in London. But this is a heart drug that has failed clinical trials. So this is a huge setback for both of those companies. given that it would have been something that would have led to billions of dollars more in sales of that particular drug. And so we are down almost 15% there. And finally, Levi's is also in focus. The company boosted its outlook, boosted its dividend, and the earnings came in ahead of expectations. But it seems that this outlook boost was just not quite enough to encourage investors, to reassure them. And so we are seeing actually quite a bit of weakness despite what seemed to be quite strong results from Levi's. We're down about 6% in pre-market trading.
All right, Chloe, thank you so much. Chloe Melee there. Coming up this hour, we're going to discuss efforts for a lasting peace deal between the US and Iran with Anna Rosenberg of Amundi Investment Institute. And later in the hour, Andrew Graham of Jackson Square Capital on why he remains bullish equities and particularly the AI trade. Traffic in the Strait of Hormuz grinding to a near halt after the US struck Iran for a second straight day, hitting around 90 military targets. Bloomberg's Abir Abu Omar joins us now from Dubai. What is the situation today in the Middle East, Abir?
Good morning, Vonnie. Back and forth, it looks like, between the United States and Iran. As you have mentioned, the United States hit Iran for a second straight day. More than 90 targets were hit in Iran. Iran reporting earlier some bridges in the eastern side of Iran were hit. And then what Iran decided to retaliate with, essentially, is hitting countries in the GCC, namely Bahrain and Kuwait. Now, this is similar to actions that Iran has taken in the past when these skirmishes have happened, even after the MOU was signed in June, Vonnie. And so we're hearing that Bahrain is reporting sirens. They're reporting that their interceptors were intercepting missiles that were launched in the early hours of the morning. Kuwait as well, saying that interceptors had detected those missiles, some infrastructure damage there as well. And so that is essentially what we're seeing in terms of the retaliation. It seems for the time being, Vonnie, that it's muted, and this is why you're seeing Brent crude prices and NY crude, I'm seeing on the screen, reversing those gains that we saw earlier in the session. It does feel like the market is not expecting this to go back to a full force, full-blown March type of situation where we're seeing kinetic warfare in the wider region. But at the essence and at the heart of all of this remains the Strait of Hormuz, where what our energy colleagues are reporting is that the traffic or the movement there has come to a near standstill in the early hours of the morning. And this is really because Iran had hit a ship at the beginning of the week, and it said that, or it cited the fact that those ships that are not sticking to the routes that it lays out will be targeted. And so this remains at the heart of this. Iran asserting dominance over the waterway is at the heart of this. President Trump saying that he doesn't know whether we're going to go back to a full-blown war, but he says that if we go back to that situation, it would be a very quick win for the United States. Iran not backing down, saying that if the U.S. strikes, Iran will strike back.
All right, Abir, thank you so much, Abir Abu Omar in Dubai. For more on the exchange of attacks and where we stand exactly with Iran, Anna Rosenberg, head of Geopolitics at Amundi Investment Institute, joins now. Anna, are we back to square one in any way here?
No, but we are also not back to how it was prior to the war, and this is something that we have been flagging for some time. This situation was never going to go back to prior to the war, simply because this war has unleashed forces that Trump alone cannot contain, and we are seeing this currently play out. In theory, the MOU should make the Iranians happy enough to stop striking. But this isn't happening, and the question is, why is this not happening? And I think what we're seeing playing out is, well, internal power dynamics within the Iranian regime that have different ambitions. Some want the MOU to continue, some want to reap the rewards of sanctions relief, etc., while others think it is more valuable to control the Strait of Hormuz. And this is why we're seeing those tensions play out. The ceasefire is not over yet. I think we're seeing a temporary tit for tat. The constraints that led to the ceasefire in the first place on Trump to pull back and offer Iran such attractive terms are still very much there. Therefore, it's more likely that the ceasefire holds after this tit for tat. But nevertheless, this is, of course, a high-risk environment that we're going to be in this tit for tat for quite a while.
How much are the funeral ceremonies for the Ayatollah impacting Iran's response at the moment? They're still ongoing. In fact, they moved to Iraq in the last couple of days.
Yes, it's a display of power, and it's not a good sign that the US decides to strike Iran at a time of a fragile ceasefire when they have an important celebration. So that overall shows you how fragile that relationship is and how fragile the ceasefire is, and why this situation is at best a temporary ceasefire, likely to last, I would say, until the midterms elections to some degree, because Trump wants a little bit of economic calm as a result of this. We have seen a change of power in the Middle East, and Iran is currently trying to reap the rewards of the MOU by cementing its geopolitical power and its power at home. And this is why we're seeing the funeral procession go into Iraq.
When it comes to the Strait of Hormuz, you know, I had thought that the Iranians were in talks in some way with the Omanis. How many routes are there now, and is there any that's acceptable to all?
Well, in theory, what has happened, and this is also why we have seen the attacks from Iran, is that it seems that ships are using more the Omani routes, which is basically outside Iranian territorial waters. And this is something that Iranians fear, because if this route becomes more established, it means that the Iranians are losing control over traffic in Hormuz. And for them, this is now a really once in a lifetime, if you will, opportunity to cement their hold on the strait. And this is why they want to introduce fees. So if the route gets established around Oman, then that's a problem for Iran further down the line. But the traditional route was centrally through the Strait of Hormuz, also into Iranian territorial waters, and they want it to go back there, because also the route around Oman is pretty thin and narrow and a lot riskier. But the US can't allow the Iranians to charge for traffic through Hormuz, because this would threaten freedom of navigation. And this has been a principle that has benefited the US since the end of the Second World War. But the Iranians are really pushing here. They want to introduce those fees. And I think that's what's going to likely come head to head between the US and Iran. Who is ultimately going to control Hormuz? Will the US budge and allow the Iranians to charge for it at one point? This could upend freedom of navigation as we have known it.
Yeah, absolutely. Anna, right as it was winding down and the ceasefire was really taking effect, we had, you know, the House of Representatives, the Senate, just basically chastising President Trump, saying that it was not backing him in this war anymore. Now that hostilities seem to be escalating again, he absolutely and very transparently doesn't have the support of Congress, right? Does that make a difference this time around?
I mean, again, we have to go back to how we got here in the first place. This deal was a surprise to the degree of what the US offered Iran. This is a very attractive deal for Iran. Iran got huge sanctions release, promises of assets being unfrozen without having to give in anything. And the fact that this deal was materialized in the first place shows you how of a weak negotiating hand Trump had in the first place. So this tells you that there are constraints on him that are very powerful, and the Iranians know that. What has happened since is that Trump has realized that the deal has not been well perceived in the US. It's been perceived as a weak deal. The oil price hasn't, gone up that much. So now he seems to be a little bit more willing to re-escalate. Obviously, the political support is important within the US, but he's been doing a lot of executive actions. And when push comes to shove, ultimately, he's going to act based on what he thinks is in the interest of the US, with or without the support of the political framework at home.
What's the base case for you and Amundi Investment Institute and your clients going forward? How does this resolve in some way?
Well, our base case is that this MOU is broadly going to hold probably until the midterms, because, as I said, because of the constraints that we saw before. Nevertheless, this is not going to be calm. We're going to see ongoing disruptions in the Strait of Hormuz, pretty much like we are seeing right now, simply because, as I said, there are underlying power dynamics, power struggles within Iran with different interests, and therefore you see ongoing attacks in the Strait of Hormuz. That's our base case. This sporadic disruptions will continue. At the same time, I think now it is more important to look at the kind of traffic that is going through and the rerouting that is taking place, because that is what ultimately will determine market reactions. And we have seen a lot of rerouting in oil, but also in other areas. And as long as there is not a big, narrowing down of things flooding into the world economy, the geopolitical fallout is not that relevant for markets. So we need to look really now at what goes around, what goes through Hormuz, and what can be circumvented.
All right, Anna, thank you so much for all the context this morning. That is Anna Rosenberg of Amundi Investment Institute. Now to other top stories trending on the terminal this morning. Volkswagen facing a make-or-break board meeting as CEO Oliver Blume pushes a sweeping restructuring that could eliminate up to 100,000 jobs and close 4 German factories. Management says deep cost cuts are needed to compete with Chinese EV makers, but labour unions and politicians are expected to fight the plan. Porsche's first half deliveries fell 16%, the weakest first half sales in 6 years. North America and China drove the decline. Porsche says the drop reflects the end of production for the combustion engine 718, strong demand last year for the all-electric Macan, and the end of US tax incentives for electric and hybrid vehicles. AstraZeneca shares fell after one of its experimental drugs failed in a major study. The treatment didn't lower the risk of heart-related deaths or serious heart problems in patients with a rare disease. The setback is a blow to AstraZeneca's push into what analysts expect will become a multi-billion-dollar market. Coming up, one of the biggest ever US debuts by a foreign company. We look ahead to SK Hynix's highly anticipated US listing. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The SK Hynix US IPO prices today. According to sources, the listing is more than 7 times oversubscribed. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, 7 times oversubscribed sounds great, but it's expected to raise $24.5 billion. Huge, but is it a little less than we expected?
Yeah, it is, and I think that really just reflects the mechanics of what's happened to their share price over the last week or so, which has been a kind of wider tech sell-off in Korea following those Samsung results, which were really strong in absolute terms, but no more than the market was expecting. So yeah, I think actually it's a little bit contradictory that you see some selling pressure in Korea, but actually such a strong level of appetite in the US market. And I think maybe that reflects a couple of things. Firstly, there's going to be some US investors that can't directly invest in the Korean market, and so they're probably wanting some exposure to the memory trade. That's kind of a real core part of the AI story. Maybe some investors also just looking to kind of hedge their bets a little bit and take out some exposure to Micron and shift it into SK Hynix. And SK Hynix trades at a bit of valuation discount to its US rival Micron, and maybe some people are thinking that actually by having a bit of a US listing that might help to push the multiple up a bit.
Unbelievably, shares are up nearly 700% year over year in Korea. But of course, ADRs are slightly different, Matt. Once they list, is there any sort of impact one way or the other on shares in Korea, or does Korean trading have an impact on ADRs? How does that all work?
Yeah, so each ADR represents about it's a tenth of a Korean share. So these are new shares that are kind of sponsored by the company. So I think you do sometimes see a bit of an arbitrage opportunity between the ADRs and the kind of local listing of companies. So I think again that may be something that's attracting specialist investors into this particular listing to kind of take advantage of some of those opportunities.
We're also now seeing CMTX looking to list next week. Is it just that we're noticing these listings in the US more, Matt, because of what's been happening in Korea, or are these a fresh, spate of listings, and will we expect to see more of them?
Yeah, it's interesting with ADR listings. You kind of see them come in cycles almost, and we're certainly seeing a bit of a positive swing back there. Historically, the US has been a great place to list. There's huge liquidity there. Investors typically apply bigger valuation multiples to the underlying assets. So I think there's a lot of attraction to invest there or to kind of list there, and it's a great place to kind of raise additional equity. It does come with additional administrative burdens, and that's sometimes put companies off or prompted them to kind of delist. But I think right now, if you're involved in the tech sector, you want to be having exposure to the US investor base as much as you can.
All right, Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. Coming up, a look at what's making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up in the New York Times, Democratic Maine Senate nominee Graham Plattner has suspended his campaign after a woman accused him of rape, allegations he strongly denies. His exit throws a key Senate race into turmoil as Democrats race to pick a new nominee before the July 27th deadline to challenge Republican Senator Susan Collins. Next up in the Financial Times, President Trump surprised NATO allies by softening his stance on Ukraine at the alliance summit in Turkey, praising President Volodymyr Zelensky and backing a plan to let Ukraine manufacture U.S. Patriot missiles. European leaders hope the shift signals stronger U.S. support and pressure mounting on Russia. And in the Wall Street Journal, JPMorgan is launching a new investment banking team to target deals for companies worth $100 to $500 million. The bank says aging baby boomer business owners and growing private equity demand are fueling opportunities in smaller M&A, an area where it sees less competition from rivals. All right, this is your market outlook for the day. We have futures bouncing back after some aggressive buying towards the close yesterday. The S&P was down about 0.3%, but a little bit of a safe haven, it turns out, in terms of the war trade. Not much movement on the US dollar index, nor the 10-year. Next up, Andrew Graham. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes, the US and Iran trading attacks for a second day, testing that fragile ceasefire. Stocks rebound, oil erasing some of those gains despite renewed tensions. And IPO appetite, SK Hynix's US offering sees strong investor demand. So we are seeing futures looking to bounce this morning. Nasdaq 100 in particular, the stocks ended up the session up 2.2% yesterday. It was almost like semis were a safe haven as war seemed to loom again, or at least the fear of kinetic escalation. In terms of treasuries, not too much movement, a little bit of movement at the front end of the curve, down a couple of basis points on the yield there after the FOMC minutes basically showed a divided committee, as we knew, but could go any which way for a next move up or down. Michael Froley calling them milquetoast. And then in oil, we did see rising oil prices yesterday, but they came off a little bit at the end of the day. We're down just ever so slightly now, about 0.5%. But still, you know, Brent crude still close to $78 a barrel. Let's get to some individual movers now with Chloe Melly. Chloe.
Good morning, Bonnie. This U.S. chip-making sector is seeing that read across from the U.S. listing of SK Hynix, which has seen very, very strong investor demand, as you were saying. And so there's this boost to the AI trade that is coming back after the recent weakness that we had seen in that sector. And so we are seeing Intel, Marvell Technologies, Micron all up more than 3%, so quite strongly in pre-market trading this morning. Moving on to Ionis Pharmaceuticals, which is down very significantly, plunging about more than 21% actually after its heart drug that it developed in collaboration with AstraZeneca failed the clinical trial results. And so analysts are saying this is a huge setback for both companies and also a test of their credibility. So that explains that huge drop. And finally, we're also in the red for Levi's, which has actually boosted its outlook, raised its dividend and had earnings ahead of expectations. But it seems that this forecast boost was just not quite enough and underwhelmed investors. And so that explains this fall this morning. We're down about 6% for Levi's despite those quite strong results.
Chloe, thank you so much. Chloe Melly there in London. Stocks in general then bouncing back after a brief risk-off spell. For more of the markets, Andrew Graham, founder and portfolio manager at Jackson Square Capital, joins us now. What was yesterday? Was it a look for a safe haven trade, or was it something a little bit different? Was it just that we had sold off enough and it was time to buy the dip?
I think it's time to buy the dip. It looks to me has all the earmarks of a classic, position unwinding, exacerbated by single stock levered ETFs in Korea, and I think it's run its course, roughly 20% drawdown in a lot of those names. And the Philadelphia Semiconductor Index is still well above levels that people would identify as technical support. It's probably about 7% below current levels. So a lift here doesn't surprise us, and I think it's an opportunity to add exposure.
But we had, risen so much. I mean, some of these names are up several 100% since the beginning of the year. Would you not be a little bit nervous getting in even at these lower levels?
So I think if you don't have to buy Micron and the new SK Hynix ADR, and if, it's just not even necessary. The entire AI theme sold off, and some of those names are our highest conviction names in networking equipment, specifically the optical transceivers like Coherent and Lumentum. So opportunity to reload there. I think they're just a casualty in this position unwind, and that's an opportunity. We also think that now is a decent time to expect the hyperscalers to show an improved return on invested capital. I think that's what this whole thing is about in the background, not just positioning unwind, but this concern or worry that during Q2 earnings season, these guys could lower their 2027 outlook for CapEx. I do not see that at all, don't see it anywhere, and I would expect, if anything, it has an upward bias.
At some point they have to, right? Does there come a point for the market where it's not a problem that they dial back that CapEx spending?
Yeah, I think maybe over time, particularly if you do it gradually, like if they are able to sort of widen that gap between operating cash flow minus CapEx, and that's really been the issue, right? That the semiconductors have underperformed. That the hyperscalers have underperformed the semiconductors. And that looks a little bit like, I don't think a lot of people are talking about it, but it does look a little bit like the 99-2000 period when you had the communication services stocks lagging well behind the communication equipment names, right? The Nokias and the Ciscos and so forth. So that's the similarity, and you can maybe point to that and say that's a little eerie, right? And that bothers me. But the time is coming. Like if it's not this quarter, it's next quarter. And I would expect it to happen sort of naturally. Token costs are falling. Token prices have stayed where they are, right? And that spread, that margin leads to incremental revenues. It leads to incremental margin improvement as well.
How do you know where to put your money or put your profits in the AI trade right now? Do you just, splatter it across the AI trade, or you picked out some areas? Why those areas? Is it a valuation thing? Is it that they're, going to be next up for scarcity?
There's a scarcity component to it. We're talking about the optical transceivers, and then there's a roadmap to co-package optics and so forth. The company that controls that tech horizon is NVIDIA. And if you look at it, the roadmap, you're going to have to go to light at some point. Copper's not going to cut it, in 2 or 3 more versions. And whether the AI trade collapses tomorrow or not, it may delay the inevitable, but the inevitable is that it's all going to go to light, and you're going to be needing co-packaged optics when you go to scale-up architecture, which is probably going to start happening in a real way next year.
The escalation of hostilities again, if it continues, does tech continue to be a little bit of a haven for investors? And why is that? Has it ever been the case before? Because
it's a secular grower. It's not really dependent as much on consumer behavior and things of that nature. So it's just sort of money rotates that way. And so, part of this uptick we're seeing maybe this morning and a little bit yesterday has something to do with that. But I wouldn't make that a big part of the theme. These things are off 20%. That's pretty natural and normal. I think it's probably maybe bigger than what we realized last time in the momentum unwind, but that's just because you have all that added leverage. And that was the pain trade. It was the obvious pain trade. That's what we have to try to do, is identify where people are, everybody's sitting on one side of the boat. Something's bad's going to happen. And so all that leverage in those single stock ETFs, that had to unwind, and that's what's been happening.
Andrew, there was a question mark over whether it was the time to start getting into China AI plays, right? China 6, 12, 18 months behind the US maybe, but catching up at some point, and it's cheaper. Would you buy into that argument, or are you purely looking at US stocks? Purely looking at US stocks. I have a hard enough time doing that. But what I thought was notable is that the open source Chinese models are closing the gap with the US frontier models. And the Brookings Institute estimate is 6 to 9 months behind our, the best frontier labs. It's called Claude Mythos. As you remember, we had to shut Claude Mythos down because we were worried about vulnerability discovery and things like that. So I don't see much likelihood that U.S. corporates are going to skimp when it comes to spending on cybersecurity. So names like Palo Alto and CrowdStrike probably even first. And then we recently added a small position in Tenable, which is really all about vulnerability discovery and management. What about about Broadcom? I know it's something that you're very much looking at. It's only, and I put that in quotes, up 12% year to date. That would be fine in a normal year, right? But in a year where we're seeing several hundred percentage points on stocks, 12% is nothing.
Yeah, I get that relative underperformer compared to the group. Okay, so you can identify that, but it's the era or the age of compute ASIC silicon is here. The Frontier Labs decided to monetize at the end of the fourth quarter, right? We started the whole inferencing phase, and there's a whole trade that goes along with that. But inferencing, period, whether it's agentic or not, is just hungrier. It's 2 to 3 times more compute hungry. It's 3 to 4 times more memory hungry, and that's where some of these shortages are building into the channel. Broadcom is part of the solution. You could also say Marvell and custom ASICs. Custom ASICs can reduce costs, overall cost of ownership, probably 20 to 30% less than a GPU, and energy usage could be as much as 50% less. So that's where it's going. I would expect ASICs to outweigh in terms of market exposure, would outweigh GPUs probably sometime in the middle of next year.
All right, it's been a pleasure to have you in this morning, and thank you so much, Andrew Graham, founder of Jackson Square Capital. Now to other top stories trending on the terminal this morning. Wall Street banks are missing out on Hong Kong's AI fundraising boom. 2 Chinese firms raised nearly $5.8 billion this week using mainly domestic banks as US and China tensions reshape deal-making and Chinese lenders gain ground in the city's red-hot AI capital markets. Cantor is accelerating its Middle East expansion, hiring 16 fixed-income professionals, with most based in Abu Dhabi and others in London and Singapore. The team will be led by a former Stifel executive as Wall Street continues investing in the Gulf despite renewed regional conflict. Aston Martin's creditors are banding together as the luxury car maker's financial pressure grows. A group holding more than half its secured bonds has formed a united negotiating bloc after mounting losses, rising debt and weak demand pushed its bonds into distressed territory. Fitch warns the company may need a lot more cash over the next 4 years. Coming up, we'll look at what the latest exchange of attacks between the US and Iran could mean for the ceasefire. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The U.S. renewed attacks on Iran overnight, hitting 90 targets, marking an escalation of violence that does threaten efforts to reach a permanent peace deal. Bloomberg Government's Mika Zollner joins us from Washington. Mika, we weren't getting that far into negotiations anyway, right? So what does this change? Does it make Iran more belligerent? What might change in the future because the U.S. has started striking targets again?
Yeah, the U.S. is on a very, very murky territory right now when it comes to what's going on in Iran. President Trump, as we saw, essentially declared the ceasefire over. There's escalated attacks now happening, and more that the president has been unafraid to just publicly say. So, we don't really know yet what to expect from Tehran, but obviously they've escalated attacks on the Strait of Hormuz, which has prompted a lot of this. And I think that there's going to be more. This is also shaking up the markets and, of course, having a strong impact economically as well. So we're seeing some of that relief go away. And I think that there's still questions yet to be seen. The White House has yet to hold a briefing in the past 2 weeks. So I think that there's a lot of questions that need to be answered. And we're going to see that when the president returns or has returned now from NATO.
Yeah, exactly. What was the thinking in Washington, Mika? I mean, were people surprised that the president did this at this time? Particularly given that the funeral for the Ayatollah is still ongoing, and also, it wasn't really telegraphed that he was going to start doing this.
Yeah, I don't know if I would say that people were surprised. As we know, the president's really unpredictable. The peace deal in itself was shaky. I do think that there are some concerns that are being raised from people in the president's orbit and Republican lawmakers as well in terms of, what is going to be the direction here and how long is this now going to last, and exactly what is the path forward. So we all have these questions. I think that we're going to, potentially see answers soon. But yeah, the timing is, I think, a little bit concerning for many people.
Just want to bring it back to the domestic now, and Graham Plattner suspending his Maine Senate campaign after the new assault allegation. He said basically they were not going to let us have it. Who's going to take his place? What is the Democratic Party thinking, Mika?
Yeah, there's a series of candidates that have already launched exploratory committees to replace Graham Plattner, and I think that we're going to see this strong battle now within Democrats in Maine, who are now deciding whether it should be someone that is more progressive, someone that is more moderate. This is a huge challenge for the Democratic Party in a race that is very pivotal and critical to take on moderate Republican Senator Susan Collins, who has maintained strong electoral victories. This is a huge relief for her as well, that the party has this, but we are going to see, potentially there's a stronger candidate with all the baggage that Plattner had. But I do know that this is something that Democrats are obviously watching very closely, and we're going to see which ideology kind of battles it out here.
Yeah, exactly. Mika, thank you so much. That's Bloomberg Government's Mika Solner in Washington. Another story we're following closely is SK Hynix's US IPO. Sources say the listing more than 7 times oversubscribed. Joining us now is Bloomberg's Neil Campling. Neil, give us the context. Is 7 times oversubscribed a lot for, new ADR issuance? And, do analysts like yourself expect that shares will pop tomorrow?
Yeah, it's a great question. Well, I mean, as far as for an international listing, this is a very large.
Neil Campling might rejoin us in a moment, but I think we get the gist of what he was going to say, that it is a very large oversubscription, and we are expecting those to trade tomorrow. And in fact, on Monday, the ticker changes from SKHYV just to SKHY, so be on the lookout for that as well. Now, we also have PepsiCo reporting second quarter results before the bell. Investors are focused on whether weakness in its North America foods business is easing. Analysts say turnaround efforts continue to face headwinds, raising concerns about quarterly sales and the company's full-year outlook. Let's get to Maddie Parker, Bloomberg consumer reporter. Maddie, the North American turnaround was just getting underway. What is the problem? Why are we not expecting to hear good things?
Yeah, morning, Bonnie. So yeah, PepsiCo are reporting second quarter results this morning. As you say, I think investors are going to be really, really focused on how the North American business in particular is doing. The first quarter was fairly robust, but the question really is whether this is going to be any sort of durable recovery. I feel like I often come on the show and talk about consumer companies, and it's difficult to avoid the elephant in the room, and it's something that PepsiCo's grappling with and its fellow consumer kind of packaged goods companies, which is that consumers in the US are facing weaker sentiment, they're facing years of inflation and a weaker labour market, and it's actually very difficult when you're trying to push those kind of snacks like PepsiCo are doing. That's Lay's and Doritos and Pepsi, of course, in a market where people just don't have the cash really to be expending like that, and particularly when they're leaning into more healthy food habits as well.
Yeah, I wonder, is activist Elliott pushing for bigger change? How is that relationship going these days?
Yeah, of course. So they've had to kind of engage with a sort of activist investor in Elliott, and it's interesting. They've kind of heard their concerns have been taken on board. They've kind of altered their strategy a little bit to try and lean into kind of some of those habits that we are seeing. We know the consumers are leaning away from the kind of sugary eating and really kind of going into more healthy products, but we also know consumers fundamentally, bottom line, are value driven at the moment. And PepsiCo are kind of leaning into that a little bit more. They've kind of expanded their sugar-free options. They've expanded their kind of larger affordable crisp packets or chip packet options. And they've even let into things like Doritos protein, which is kind of like you can get a protein hit now from your crisps or your chips. So it'll be interesting to see kind of how those products are picking up, and particularly if investors are kind of pleased with the turnaround that they're seeing at the moment. Yeah, and it will be a read across for other makers of these types of snacks and drinks, right? Because they even have a protein drink, which I hadn't fully realized. This protein, craze has literally become a craze. Do we know anything about how Pepsi's protein drink is doing, or as you said, protein snacks? Yeah, well, I think it'll be interesting to see. I think there's going to be naturally a bit of consumer skepticism, I guess, around whether you're going to really get the protein hit that you need, maybe from the kind of sugary drinks and the snack options, as opposed to your usual sources of protein like meat and kind of like the pulses and the options like that. So I think it will be interesting to see how they're doing. I'm not entirely sure how consumers have initially responded, but I think these results can be quite telling in terms of their push on that front.
Maddie, what else are you watching out for in terms of read on the consumer before we begin next quarter's earnings in earnest, which actually is not that far away, a week or two?
Yeah, totally. I mean, I think one of the big things that we're going to be watching from a lot of companies kind of across the board is how they've been able to kind of dampen a little bit of actually the price inflation that we were worried about kind of at the start of the year. Of course, the kind of conflict in the Middle East is something that, particularly in earnings calls, we were all joining. It was the number one question on the agenda every single time. Everybody was asking CEOs how much price is going to inflate by. And a lot of them were saying, oh, the kind of latter half of the year, maybe when we see some of these kind of inflationary pressures kind of creeping through. So I think that's definitely something that across consumer companies will be keeping an eye on, particularly when we know that sentiment is down and kind of spending is quite dampened. It's the last thing that consumers want to see. So it'll be interesting to see if they're able to grapple with that well.
And we know back around COVID, when inflation was really hurting companies, we saw them put things in smaller packaging, and that really didn't go down too well with the consumer either, Maddie. So how are companies, managing so far with cost inflation? Are they able to push it on to consumers? Are they suffering margin-wise?
Yeah, well, a lot of them are saying you have to actually, the absorption of those costs is going to be quite significant, and they're going to have to kind of try and navigate that. It's kind of creeping through in some of the results, but as you say, looking forward to kind of the second half will be really quite telling in terms of that side. I think consumers at the moment are going to be, obviously, as I say, they're watching their pennies. They're not looking to be buying smaller products for kind of increased prices. So it'll be interesting to see. I think one of the other trends, and something that we talk about a lot actually, is the impact of kind of weight loss drugs and GLP-1s on the consumer base as well. It's something that a lot of companies are leaning into, is actually making smaller portion sizes and kind of pushing those forward. So that's kind of a nifty go around in terms of trying to get some of those smaller products out on the shelves. But yeah, it'll be interesting to see how consumers are actually responding and whether they've got the cash to be spending on discretionary products like this.
Yeah, exactly. A lot of innovation in the sector too. Bloomberg's Maddie Parker, our consumer reporter, thank you so much. Coming up, we're going to get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today, your Thursday trading session. We were just talking about it. PepsiCo's second quarter results, they're out before the bell. We get some more Fed speak as well today from John Williams and also Laurie Logan speaking. And SK Hynix prices today starts trading in the US tomorrow. Let's take a look at your outlook then, macro-wise, because yesterday was a very interesting session. It started off with a lot of jitters, a lot of bellicosity from President Trump, but walked back a little bit later on in the day. But we did see a rise in oil prices, and we're very closely monitoring the Strait of Hormuz for action, or at least lack of action. We're going to see whether ships stop sailing through and what that means for commodity markets. Right now, we're off our highs, but we're still up at 78 for Brent, and we're still above 73 for WTI. Now, these are about 25% below the peaks, right? And we're not really at levels that we were when we were right in the heart of the war, but definitely escalation is on the cards. European gas futures just coming off their highs as well. There had been a pretty massive advance over the last couple of days for European gas. When it comes to everything else, it seems like the escalation trade helped the AI trade randomly. It's so strange to see that the AI trade, and particularly tech, was a safe haven actually for investors yesterday. We actually saw the Philly Stocks Index up 2.2%. This even as Korea had sold off and went into a bear market, and as jitters just were abounding when it came to the AI trade. Nevertheless, maybe dip buyers had come back out as well of the woodwork. We did see the 2-year yield drop just a little bit, even as the rest of the curve continued to stay steep after the FOMC minutes. As Paul Donovan put it, could go up, could go down. Michael Froley of JPMorgan saying the minutes were pretty milquetoast, didn't really tell us anything new. And we've a pretty stable US dollar index today. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.